You've seen the posts, $1,000 to $1 million in 6 months. I turned my savings into a fortune trading crypto. And every time there's a part of you that thinks, maybe, maybe that could be me. I'm going to be honest with you today. That version of the story is mostly a lie. Not entirely impossible, but built on luck, not on skill. And luck runs out. But here's what nobody is telling you. There is a scientific, repeatable way to build serious wealth in the markets. It's the same method the world's best hedge funds use. It doesn't require finding the next Nvidia. It doesn't require taking insane risks. It requires something far more valuable: discipline and a clear strategy you can actually execute. By the end of this video, you will completely change the way you think about trading and building wealth. Stay with me. Most people sit down, open their trading app, and ask themselves, how do I turn my money into X10, X100, X1000? That question is killing your results because it pushes you toward gambling, not investing. It makes you chase moonshots. It makes you panic. It destroys accounts. Now, let me give you a different question. One question that the moment I started asking it changed everything for me and for the professional traders I've worked alongside. What performance do I need to be able to repeat? And how many times do I need to repeat it to reach my goal? Read that again, because that question rewires your entire brain when it comes to money. It's not about one big win. It's not about one lucky trade. It's about a process you can execute again and again and again. That's wealth. That's how the big players do it. Let's talk numbers. What do the best hedge funds in the world actually return every year? Renaissance Technologies, consistently 20 to 30% net per year, sometimes more. Bridgewater Associates, built to be consistent across all market conditions. Two Sigma, Citadel, similar story. These are the most sophisticated financial operations on the planet. Armies of PhDs, supercomputers, billions in resources. And what are they aiming for? 15 to 30% per year consistently, year after year. Not X100 in 6 months. Not finding the next meme stock. Consistent, repeatable performance leveraged by one of the most powerful forces in finance, compound interest. Albert Einstein reportedly called compound interest the eighth wonder of the world, and whether he said it or not, the math proves it true. So what is compound interest in trading terms? It's simple. You make a gain, and instead of taking that money out, you put it back to work. Your capital grows. Your next position is bigger. Your gains get bigger. Your capital grows faster. The snowball effect. Slow at first, then unstoppable. Let me show you exactly how it works with a real example. Starting capital $5,000, target goal $100,000, performance per trade 20%. Trade 1, 5,000 becomes 6,000. Trade 2, 6,000 becomes 7,200. Trade 3, 8,640. By trade 10, you're at nearly 31,000. And by trade 17, you've crossed $100,000. 17 trades. That's all it takes. Not 17 years, not 17 lucky picks. 17 disciplined, repeatable, 20% performances, putting your gains back to work every single time. And then once you're at 100,000, you only need 10 more of those same trades to cross 1 million. The math gets more powerful as your capital grows. That's the magic. The bigger your base, the faster it compounds. This is exactly why the rich get richer, not because of luck, because of this principle. Now I know what some of you are thinking. Only 20%? I want to make X10 on a trade. I hear you. That instinct feels natural. It feels exciting. But let me ask you something. What's the success rate of someone chasing X10 on a speculative stock, on a meme coin, on an options play? Honestly, most of those bets fail. And when they fail, they wipe out not just one trade, but months or years of work. I've seen it happen hundreds of times working as a professional market analyst. Smart people, good intentions, burned accounts. Now, compare that to targeting 20% on high quality, well established companies. Apple, Meta, Tesla, Nvidia, stocks that have a history of recovering from corrections. Your probability of hitting 20% dramatically higher. Your probability of losing everything close to zero if you're disciplined. 20% done consistently beats X10 done occasionally every single time. The math doesn't lie. So, how do you actually hit that 20%? Let me give you one of the most powerful beginner friendly methods I know. It's been working in markets for decades, and in today's market, it's more relevant than ever. Buy when everyone else is selling. It sounds almost too simple. But think about what happens during a market crash or a sharp correction. Panic spreads, people dump their positions. Quality stocks fall, not because the companies are broken, but because of emotion, fear, headlines. That's your window. That's where your 20% lives. Look at April 2025 during the tariff war escalation. We saw a sharp market sell off. Stocks like Meta, Tesla, and Nvidia dropped 15 to 30% in days. The news was terrifying. Social media was full of doom and gloom. But look at what happened next, the correction. Within weeks, those same stocks retraced back to and beyond their previous levels. If you had the discipline to buy into the panic, you had your 20% in a matter of weeks. Tesla is a perfect case study. It's one of the most volatile large cap stocks out there. Every few months, it offers these dramatic dips, and almost every time it bounces back. The pattern repeats. Why does this work? It connects to a theory that has been a cornerstone of technical analysis for nearly a century: Elliott Wave Theory. The idea is that markets move in predictable wave patterns: impulse waves upward, correction waves downward. When a correction happens, the market tends to recover in a structured, repeatable way. You don't need to catch the absolute bottom. You just need to recognize the pattern and position yourself for the bounce. This is not magic, it's pattern recognition, it's psychology. It's the fact that markets are ultimately driven by human behavior, and human behavior is predictable. I want to be real with you for a second. I've spent years in professional financial institutions as a market analyst, and every single day I watched people, smart, motivated people, lose money. Not because they weren't intelligent, not because the market was unfair, they lost because they acted on emotion. Panic selling during crashes, buying at peaks out of fear of missing out, chasing hype, abandoning their strategy the moment it felt uncomfortable. The market doesn't reward excitement, it rewards discipline. When you have a defined strategy, you know your entry, you know your target, you know your exit, you stop making emotional decisions. A crash is no longer terrifying. It becomes an opportunity you've been waiting for. A correction is no longer a crisis, it's your signal. That mental shift is everything, and it comes from trusting a process that is built on math, history, and logic, not on gut feelings or social media tips. Whether you're trading stocks, ETFs, or even crypto, the principle is the same. Define your performance target, repeat it, compound it, be patient. So let me bring it all together because this is the foundation everything else builds on. Stop asking, how do I make X100? And start asking, what performance can I repeat and how many times do I need to repeat it? The best funds in the world build wealth through consistent, repeatable performance, not lucky bets. Compound interest is your most powerful tool. $5,000 to 100,000 in 17 trades, 100,000 to 1 million in 10 more. One of the most reliable ways to hit 20% is to buy quality stocks during corrections when everyone else is panicking, and discipline beats excitement every time. The strategy only works if you execute it. Now, in the next video, I'm going to go deep on the how. I will walk you through 5 specific methods to identify the exact moment to enter a trade and hit that 20%. I'll show you how to read key opportunities and how to build your own personal strategy, whether you're a complete beginner or you've been trading for years. If you want that video, like this one, drop a comment and subscribe, because I only make it if you tell me you want it. And if this shifted something for you today, share it with someone who's been losing money chasing the wrong things. You might just save their account.